Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I'm going to describe about filing ITR, the bare minimum every taxpayer should know before filing your return. Every year when income tax return filing season arrives, many people start looking for quick solutions. Do you know a good CA? Which website should I use? Can someone file my return? These questions are common because taxation often appears complicated, especially for first-time filers. The fear of making mistakes, receiving an income tax notice, or spending too much time understanding rules often pushes people towards depending completely on professionals or online filing platforms. Taking professional help is absolutely fine, especially in complicated cases. However, understanding the basics of your own tax return gives you confidence and helps you know what exactly is being filed on your behalf. This guide is not about replacing a tax expert, it is about understanding the five important things every taxpayer should know. First, basics of filing an income tax return. Second, choosing between old and new tax regimes. C. Arranging required documents. D. Understanding available help, including AI tools. E. Important reporting requirements for investors. Before everything else, remember one broad point. If your income crosses the prescribed limit, for example, above rupees 4 lakhs under the current structure, filing an income tax return becomes important. Even if your final tax liability is zero, filing a return can still be necessary depending on applicable conditions. First, understanding the basics of income tax filing. When studying taxation, one of the first concepts explained is that every income earned by an individual generally falls under five major heads of income. These five categories cover almost every type of earning. First, income from salary. This includes salary received from employment and pension. B. Income from house property. This mainly covers rental income from residential or commercial property. C. Capital gains. Whenever you sell assets such as shares, mutual funds, property, gold, or other investments and earn a profit, it generally comes under capital gains. D. Business or professional income. This applies to people running businesses, freelancers, consultants, or professionals earning through their work. And E, income from other sources. This is a broad category covering income like fixed deposit interest, savings account interest, dividend income, freelance income in some cases, tuition income, lottery, or other miscellaneous income. In simple words, whatever money you earn generally fits into these one of five sections. Except for certain capital gains, most income is taxed according to your applicable income tax slab. That means your salary, rental income, FD, interest, etc. are not taxed at one single rate. Tax is calculated step by step depending on your income level. New tax regime slabs for FY 2025 to 26. The new tax regime follows a progressive structure. Income up to rupees 4 lakh, nil tax, rupees 4 lakh to rupees 8 lakhs, 5%, rupees 8 lakh to rupees 12 lakhs, 10%, rupees 12 lakh to rupees 16 lakh, 15%, rupees 16 lakhs to rupees 20 lakh, 20%, rupees 20 lakh to rupees 24 lakhs, 25%, and above rupees 24 lakh, 30%. The important thing to understand is that higher tax rates apply only to the income falling in that. For example, if your income is rupees 25 lakh, the entire 25 lakh is not taxed at 30%. Only the portion falling above rupees 24 lakh enters the highest slab. This is one of the most common misunderstandings among taxpayers. Your main responsibility while filing is to report the correct income under the correct category. Choosing the correct ITR form. The government has different income tax return forms depending on the different type of income. ITR 1, generally used by individuals having salary income, pension income, one house property, other income such as bank interest, subject to applicable conditions and limits. ITR 2, generally applicable when you have capital gains from shares, mutual funds, property, etc., more complex income sources, certain investment related reporting requirements. Even if long-term capital gains from shares or mutual funds are within exemption limits, the correct form requirement should be checked before filing. ITR 3, generally applicable for individuals having business or professional income. Choosing the correct form avoids unnecessary issues later. Second, old tax regime versus new tax regime. How to decide? The best decision for many taxpayers is selecting between the old and new tax regimes. The old tax regime follows the traditional approach. You pay tax after claiming deductions and exemptions such as Public Provident Fund (PPF), ELSS investments, life insurance deductions, National Pension System (NPS), house rent allowance, home loan interest benefits, other eligible deductions. The more eligible deductions you claim, the lower your taxable income can become. The new tax regime works differently. It offers lower tax rates, fewer deductions, simpler calculation. The idea is to reduce paperwork and make taxation simpler. Old versus new tax regime comparison. Old tax regime, fewer slabs with higher rates, basic exemption limit around rupees 2.5 lakh, more importance of investments and deductions, more documentation required, useful for people with high deductions. New tax regime, more slabs with lower rates, basic exemption limit increased to rupees 4 lakh, simpler filing process, limited deduction benefits, suitable for many salaried taxpayers. For many salaried individuals, the new regime may work better because of lower tax rates and fewer complications. A salaried person earning around rupees 12.75 lakh after considering the standard deduction may have zero tax liability under the new regime due to rebate provisions. However, the old regime can still be beneficial if you have large HRA benefit, significant home loan interest, education loan repayment, large eligible investments. The correct approach is not to blindly choose one regime, compare both based on your actual numbers. Break even point. When is old regime better? The old regime becomes attractive when your total deductions cross a certain level. For example, income around rupees 15 lakh may require deductions of approximately rupees 5.43 lakhs to make the old regime beneficial. Income around rupees 20 lakh may require deductions around rupees 7.08 lakh. Higher income levels may require deductions close to rupees 8 lakh. If your deductions are lower than the break-even point, the new regime may usually provide better simplicity and comparable tax savings. Third, documents required before filing ITR. Before starting your return, keep important documents ready. Form 16 provided by your employer. It contains salary details, TDS deducted, allowances, deductions considered by employer. Tax calculation. Part A mainly shows TDS details. Part B provides the salary breakup and tax computation. Form 26A is available through the income tax portal. It shows TDS deducted from salary, bank interest TDS, other tax deductions reported. Your TDS claim in the return should match the information available here. Annual Information Statement (AIS). AIS is one of the most useful documents for taxpayers. It provides details of financial transactions reported to the income tax department, including salary information, interest income, dividend income, share transactions, mutual fund transactions, property transactions, foreign transactions. Before filing, reviewing AIS is extremely important because any mismatch can lead to future communication from the department. Capital gains statement. Investors should collect capital gains report from their brokers. These usually contain purchase date, sale date, purchase value, sale value, profit or loss calculation. Broker platforms generally provide tax reports through their respective dashboards. Interest certificates. Download interest statements from your bank's internet banking portal. This help report savings account interest, fixed deposit interest. Property documents. For property transactions, keep deed, purchase details, stamp duty information, dates of purchase and sale. Fourth, Whom should you take help from? AI, CA, or online platforms? If you're filing for the first time, questions like these are common. Where should I enter capital gains? Which section applies? How do I complete verification? The Income Tax Department also provides an AI-based assistant called Karsathi through the official income tax website. It helps answer procedural questions related to filing process, portal navigation, tax-related procedures. It is useful because it works using official tax-related information. However, like any technology tool, it may not always answer every specific tax interpretation question perfectly. For simple filing related guidance, it can be helpful. For complex situations involving business income, multiple properties, international investments, or complicated transactions, professional advice remains valuable. Important reporting for investors. For investors, capital gains reporting is usually the most important area. When you sell shares, mutual funds, property, other investments, you need to report the gains or losses. Your broker's tax report generally provides the necessary details. In ITR 2, important sections include Schedule 112A, used mainly for long term capital gains from listed equity shares, equity mutual funds. Long term equity gains above the applicable exemption limit are taxed as per prevailing rules. Capital gains schedule used for short term gains, property gains, debt fund gains, hold other assets. Different assets have different tax treatments. Shares purchased before January 31st, 2018. For older equity investments, special rules apply. The government introduced equity capital gains taxation from 2018. Therefore, for eligible old investments, the market value as on January 31st, 2018 fair market value may become relevant while calculating gains. Broker tax reports generally consider these calculations. Foreign investments reporting. If you hold foreign shares or assets, additional reporting may be required. You may need to disclose foreign income, foreign assets, investment details, country details. Schedules such as foreign source income (FSI) and foreign assets (FA) become relevant for eligible taxpayers. After filing the return, once the return is submitted, complete e-verification, receive acknowledgement, keep records safely. For many salaried and non-audit taxpayers, the deadline for FY 2025-26 is generally July 31st, 2026, subject to applicable rules and changes. One important reminder, do not share your income tax password. Many people share their income tax portal login details with others for convenience. You do not need to share your password with your CA. Instead, use the authorized representative facility. Income tax portal, authorized partners, my chartered accountants. Add your CA using their ICAI membership details. This allows professional access while keeping your account under your control. Conclusion: income tax filing may look complicated from outside, but the foundation is simple. Understand your income sources, collect correct documents, select the right tax regime, report investments properly, and verify your return. You do not necessarily need to become a tax expert, but knowing the basics helps you make better decisions and avoid being completely dependent on others. For simple cases involving salary, bank interest, investments, and limited property income, many taxpayers can understand and manage the process with proper awareness. For complicated financial situations, professional guidance is always advisable. Disclaimer: this article is prepared only for general awareness and educational purposes. Tax laws, limits, forms, and procedures may change from time to time. Individual tax liability depends on personal facts and circumstances. For complex cases, consult a qualified tax professional before taking any financial decision. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.